Hey everyone, this is Scott Neal with Scott Neal Real Estate, and today I've got a special guest with me on the line, John Hardimon of the John Hardimon team at Verity Mortgage. They are our preferred mortgage lender. We refer them to all of our clients. They do a fantastic job, and I've got him with me because the Fed recently raised rates, and we want to talk to him and get his expert opinion on how that's going to be affecting us. Okay, so John Hardimon, welcome. Tell us a little bit about who you are and what's been going on in your world.
Hey Scott, thanks for having me on here today to talk about this, and just a little bit of background on us. You know, my team has 3 licensed loan officers on it. Of course, I'm one of them. Been in the business about 19 years now. Started off in the legal profession, so yes, you can get free of that. We've been doing this a long time, all by referral, so we really care about what's happening with our folks.
Okay, thanks, John. Appreciate you being here. So, recent news just came out that the Fed made a special announcement. Can you kind of describe to us what just happened recently?
So here's what's happened. 2 things have converged together. One, the Federal Reserve Board has decided to raise the bank funds rate. That's what banks have to pay to borrow funds to then turn around and loan money to us. So when it goes up there, it goes all the way back up to us as well. And so that's come up now. We're now up another quarter point from where we are, which is not huge, by the way. It is a move, but it's not huge. There's another thing that's taken place, though, and that is that the market has moved where mortgage-backed securities are now not quite as desirable because the stock market is doing really, really well, and so they have to charge more, if you will, pay more for the mortgage-backed securities, give a better return for those mortgage-backed securities. What that in turn means for you and I is that we had about a quarter of a point move from the market and about a quarter of a point adjustment by the Federal Reserve. So adding those two together, it's been about a half point move to rates over the last roughly 6 weeks, really since the election. Not being political here at all, but the market's been very, very positive in responding to the new president-elect, maybe just because we're sick of slinging mud at each other and we're now on the same side again. What that means for us in numbers, just to give you an example, about a $400,000 loan that goes up a half of a point over this time would make a difference of about $700 per year. So it is a difference, but that's only probably $55 a month on a $400,000 loan. Anyway, so that's the major effect. It is there, but there's one thing to know about, and that's the future. The future still is for an upward movement. Everyone believes there's an upward movement of these rates as they continue. So, like anything, the rates are great. If you find a good house that makes sense for you, you better buy it today versus 6 months from now or 3 months from now, because the rates are probably a little higher then as well.
Okay, so even though, anytime the Fed comes out and it's significant, but, overall in the grand scheme of things, this isn't that big of a jump, right?
Yeah, Scott, that's exactly right. It's not that big of a deal, but it is something to be aware of. The bottom line is rates have been low this year and the preceding few years, and the market's been good. So get in. It's like Apple stock or something like that. When do you want to buy it? Well, yesterday, 5 years ago, 10 years ago. Real estate's kind of the same deal. It's getting better, particularly here in the North Dallas area. We're so blessed in Texas. Our economy is so strong. Our real estate market is so strong that it just makes sense. If you're looking to buy a house, why in the heck are you going to pay $18,000, $20,000, $25,000, $30,000 a year in rent that goes nowhere when you can put that towards equity in your own home and paint a wall and have a dog and have a nice barbecue cookout and all the kind of great things that home ownership brings, along with the tax breaks?
Well, John, anytime something's going on in the mortgage business, you're the first guy that I call, and we just want to say thanks because you've been a great mortgage officer to all of our clients, so keep up the good work. Why don't you let everybody know how we can get in touch with you if we're ready to start exploring the great world of getting a mortgage?
Well, I appreciate that too, Scott. We'd love to serve you here. We're here in the Dallas area. You can reach us at john@johnhardimon.com. The trick there is HARDIMON. John@johnhardimon.com is our email. Same as the website, www.johnhardimon.com. You can always call us here in the office, 972-820-5735, 972-820-5735. We've got a team of 3 loan officers here that work together, Kendra, Lindy, and myself, the best processor in the whole state, and Lyra Matthews. interviews. We pride ourselves in taking great care of you, making sure we answer all your questions easily to get access to us. And hopefully get a chance to work with you. If you just have questions on your credit, anything that's going on with your finances, we're here to help you through that whole process. We love doing it. This is what we do, and it's a lot of fun. It's a good time to do it here in North Dallas. Hopefully get a chance to talk to some of you folks and help you make homeowners and get you out of that whole landlord deal. All right? Have a great day. And hey, if we don't talk, Merry Christmas.